Hi everybody, Alex Deploy here from Expert Forex, and in today's video I'm going to be talking about the variable gap and position sizing that's been implemented in the latest upgrade for the Grid Trend Multiplier. So what we've done is we've made it more flexible for counter trend scaling to happen. Now what happens is when the price starts trending in a certain direction, a lot of the damage is done by having positions open in the counter trend area. So if you have a buy trend, your sell transactions become problematic, or if you have a sell trend, your buy transactions become problematic. Now these settings are there to reduce the impact of the counter trend positions. So, and I'll explain that in a little bit more detail with an example. But what you can do is, let's say you have a couple of open buys, and the market starts trending downwards. In other words, starts selling. You can say that after 3 levels of buy transactions that are open, then increase the gap sizes by 100%. In other words, double the gap sizes for buys. That means it opens fewer buyers, and therefore your losses can be reduced. Or in this case, reduce the lot sizing by 50%. So again, it reduces the losses that you could make on buy transactions. And the reverse is obviously applies to the sell transactions. In order to apply these transactions on an individual basis, you need to set the sell settings to manual sell settings, and then those would apply. But let's have a look at a few examples of these calculations. Okay, so let's have a look at the numbers. That might make it a lot clearer. So let's say the normal way of trading is we'd have constant gap sizes and constant position sizes, and I've used 100 just as an example for calculation purposes, and a main lot for as a position size over there. So these adjustments that I just showed you earlier, you can do a gap change, and let's say we want to change the gap by 100% after 3 levels. So what would happen is, based on the basic case, the first 3 levels will remain the same, but after that the gap will increase by 100%. So that means it will double. So it's 100, 200, 400, 800, 1600, and 3200. Now, in the case of if the trader wants it to actually go smaller, it would be a negative percentage. So you'd go, the first 3 wouldn't be affected. 50% is basically halving it, so it would go 100%, 100, 50, 25, 20, and then it would hit the minimum gap size that is allowed, which is sometimes more or less 10 pips. And the same thing would apply to position sizing. If you want to increase your position sizing, the first 3 levels would be unaffected, but then the 50% increases would happen on each level. Or if you want to decrease it, the 50% decrease would happen on each level. Again, you could hit a minimum lot size levels that are imposed by the broker. That's why this is grayed out. The calculations could become so small that they're either smaller than the broker's minimum, or they can become so big that they're too big for the broker's maximum lot sizing. But you just need to be aware of that. So this explains those calculations. Just to emphasize again, this is only for counter trend movements. It isn't for with the trend movements. Now, these variable gap and position sizing adjustments are really risk control adjustments to make sure that you don't get hurt too much in big trends. Now, I hope you found this video interesting, and you really need to go and play around with these settings to get a feel of how much risk control they add to your trading. From me, Alex Deploy, cheerio.